Welcome to Breaking News to Trading Moves. Today our focus is on a regulatory decision for a single therapeutic drug and how that one event can really alter the landscape for an entire sector.
We've been looking through a set of documents that detail the outcome of a major decision in the biotech space. And, the immediate implications are pretty broad. They touch everything from research organizations all the way to specialty brokers.
And our mission here is simple. We're going to analyze the core regulatory event, try to identify the immediate winners who saw some gains, and then detail the losers who faced, well, immediate headwinds.
Right. And the headline we're addressing today involves Corcept Therapeutics, that's ticker CORT, and their drug, Relacorilant.
So what was the core statement? The one that sent CORT's valuation down?
The US FDA declined to approve Corcept's Relacorilant. The drug was being developed for hypertension, specifically in patients with hypercortisolism, which, is more commonly known as Cushing syndrome.
And the regulatory message itself, what did that look like? What created this market vacuum?
The official communication from the FDA was something called a complete response, and it cited two main problems. First, insufficient evidence of effectiveness, and second, concerns about the drug's benefit-risk profile.
So that suggests the data they submitted just didn't clear the bar.
It didn't, exactly. Corcept has said they'll meet with the FDA to figure out the next steps, but look, in the biotech world, a complete response letter, or a CRL, is almost never a quick fix. These kinds of setbacks often reset timelines by years.
And that means new trials, more spending.
New trials, for sure. And that places a huge financial strain on smaller biotech firms that were banking on that revenue coming in soon. So we're going to look at who gained and who suffered from this specific outcome.
Okay, before we get to the trading moves, let's set the scene on the medical side. What is hypercortisolism or Cushing syndrome, and why was this drug, Relacorilant, targeting hypertension in these patients?
Sure. So Cushing syndrome is a really complex and often debilitating rare disease. It's basically defined by the body being exposed to way too much of the hormone cortisol for a long time.
And cortisol is the stress hormone, right?
It is, and while it's essential for life, having chronically high levels causes a whole host of problems. You see things like rapid weight gain, muscle wasting, severe fatigue, but one of the most serious complications is hypertension, severe high blood pressure.
Which is dangerous for anyone, but I imagine in a patient already compromised by Cushing's, it's even worse.
Oh, absolutely. The high cortisol level directly fuels the hypertension through a few different mechanisms, like fluid retention. So Corcept was developing Relacorilant as a drug to block the effects of all that excess cortisol.
So the idea was to treat the symptom, the high blood pressure, by tackling the underlying hormonal cause.
That's it, exactly. The goal was to reduce that blood pressure component and improve the quality of life for this very specific patient population.
A noble goal. But let's turn to the fallout for Corcept Therapeutics, CORT. They're the direct casualty here. When that CRL came out, how did the market react?
The reaction was swift and punitive. The complete response letter basically erased all near-term revenue expectations that were tied to this drug's approval. You have to remember, for a company like CORT, its valuation is heavily based on the anticipated success of a key late-stage asset.
One of those single asset stories, you mean?
Right. So a rejection, even if it's not a final no, it forces a very rapid reevaluation from investors.
And that's because if you're a financial analyst, you are modeling for revenue to start next year, and now you have to push that out 3, maybe 4 years and add a higher risk of failure. The present value just collapses.
It does. The stock, CORT, fell sharply because the street had priced in an approval. That expected stream of revenue is just gone, and it's replaced by years of uncertainty and millions in new spending. It's not just the delay, it's a repricing the execution risk.
And the path forward for CORT is now, well, financially draining. What does that typically look like after a decision like this?
The path is almost always longer, more complex, and much more expensive. When the FDA cites efficacy shortfalls, that often means the company has to run costly new trials. We're not talking about small tweaks.
Right, we're talking about whole new phase 3 studies.
Entirely new confirmatory trials, yeah. That means finding new patient groups, opening up clinical sites around the world, hiring more staff, contracting biostatistical support. It's a massive undertaking.
Sounds like a capital black hole for a few years.
It's a profound drag on capital. And what's more, this kind of outcome raises the perceived regulatory risk for other small companies that have similar single-asset stories. It's a stark reminder to the market just how high that regulatory bar is.
The message seems to be that developing drugs for specialized conditions is demanding, it's expensive, and success is never guaranteed. So this puts Corcept, C-O-R-T, firmly in that headline casualty category.
Let's just elaborate on the regulatory mechanism for a second. A complete response letter isn't a refusal to file, or an RTF. An RTF means the application wasn't even accepted for review. CRL means the FDA did their full review, and they decided the current data isn't enough for an approval right now.
Okay, that's an important distinction. So it's more of a show us more proof than a hard no.
It's a demand for more confirmatory evidence. And in Corcept's case, the two reasons they gave are critical. First, insufficient evidence of effectiveness. That's probably the most damaging part because it suggests the clinical data just failed to meet the bar to prove the drug actually worked reliably in this population.
And the second point, the benefit-risk profile. What does that mean in practice?
That's the key balancing act. The FDA has to weigh the drug's effectiveness against its side effects. So even if Relacorilant showed some benefit, if the side effects were too severe or too frequent, the FDA might conclude that the risk doesn't justify the benefit, especially when there are already other approved treatments out there.
So the small benefit they saw was outweighed by the potential risks.
That's the takeaway. And that framing, the insufficient evidence, it becomes really important later because it makes investors very cautious about related fields where data has to be rock solid.
So it's a clear rejection of the data package they submitted. The FDA wants a bigger, longer study to confirm the results.
That's the consensus, yes. And the company now has to finance that work with a lower probability of success and a much delayed payoff.
Okay, so Corcept, C-O-R-T, is the direct hit. But you mentioned this introduces pressure on peer companies with similar high-risk profiles. Who else got caught in that initial wave?
Well, when an event like this happens, investors tend to generalize that risk to a whole group of companies. Outlook Therapeutics, ticker OTLK, is a good example here.
OTLK.
Right. OTLK is another small-cap biotech, and its valuation is also extremely dependent on a single upcoming regulatory decision.
So investors aren't waiting for bad news about OTLK specifically. They're just selling the entire category of companies that face one of these make-or-break announcements.
That's the nature of risk generalization. The market basically says, if the FDA is tough on the CORT, then the odds just got a little worse for every other highly dependent single-asset small cap. You saw an immediate flight from companies where one event determines their future.
We've established the immediate damage. So let's pivot now to the flip side of this. When a potential newcomer stumbles at the regulatory gate, it has to create opportunities for others, right? For established players.
It absolutely does. The delay creates what you could call a competitive vacuum. And existing market participants, they rush in to solidify their position. The market psychology flips from risk aversion to market share capture.
Okay, so let's start with that first category of winners.
Yeah.
The approved alternatives for Cushing syndrome. Who gets some breathing room here?
It's a purely commercial dynamic. With Relacorilant delayed, doctors and insurance payers are just going to stick with the current approved options. Physicians are already trained on them. They're familiar with the safety profiles. They're not going to change their habits for a delayed drug the FDA just questioned.
So any demand that might have gone to this new competitor now just stays with the market and therapies. It gives the existing players a sort of temporary period of exclusivity.
It's a commercially valuable window, exactly.
Yeah.
They can optimize their pricing, maybe secure better coverage from payers, and just reinforce their drug's track record with physicians.
And who are the main companies that are benefiting from this?
The materials point to two main names, Xeris Biopharma, that's XERS, and BioMarin Pharmaceutical, ticker BMRN.
XERS and BMRN.
Right. Xeris in particular markets a drug called Recorlev, which is already an FDA-approved option for Cushing syndrome. So for them, the lack of a new, well-funded competitor gives them a crucial period of market stability.
And that kind of protection is incredibly valuable. It means they don't have to deal with the immediate price pressure or spend a ton of money on marketing to fend off a new launch from CORT.
It solidifies their revenue base. For BMRN, while their therapy addresses a different aspect, the overall reduction in competitive noise in the orphan disease space is a net positive. It shields their existing revenue from the erosion that would have likely happened if Relacorilant had been approved.
Okay, let's move to the second group of winners. The clinical trial enablers, the contract research organizations, or CROs. Now explain this one, because it seems a little counterintuitive that a drug failure would mean guaranteed revenue for these service providers.
It does seem that way, but it's all about the regulatory logic. The FDA's CRL cited insufficient evidence. That phrase basically mandates that the company, CORT, must conduct more trials to satisfy the agency if they want to move forward.
And those additional trials are the entire business model of the CROs.
They're the economic engine of that whole sector. These newly required trials, they need more sites, more patient monitoring, complex data management, a ton of biostatistical work. All of this has to be done to make sure the new data is robust enough.
And a company like Corcept can't just spin that up in-house overnight.
No way. They have to outsource it. So this massive spend, which is essentially guaranteed by a regulatory failure, is a powerful tailwind for the big CROs. The cost to fix these issues can often be even higher than the cost of the initial trials.
So the market sees the CORT failure and immediately translates that into guaranteed future revenue for the trial infrastructure. Who are the big players benefiting here?
We'd identify two of the largest, most sophisticated companies: IQVIA Holdings, ticker IQV, and MedPace Holdings, MEDP. These are global platforms that specialize in exactly this kind of complex trial, especially in rare diseases where finding patients is tough.
So they thrive on the duration and complexity of the development cycle, not necessarily the success.
That's a great way to put it. Their business models are insulated from the final outcome of the drug. Whether Relacorilant eventually gets approved or not is secondary. The work itself, that multi-year, multi-million-dollar remediation process, is billable. A major rejection often guarantees several more years of high-volume work for them.
That's a critical piece of the puzzle. Okay, let's hit the third category of winners: brokerages and market infrastructure. How does all this turbulence translate into gains for a platform like, say, Robinhood?
The catalyst here is pure volatility. These large, sudden price gaps, like the rapid drop in CORT's stock, they drive a massive increase in trading activity. Fear, confusion, opportunity. It all translates into transactions, and every transaction generates revenue for the platform.
You're saying the moment CORT dropped, the trading volume just spiked.
It spiked instantly.
Yeah.
Day traders, options traders, they all rushed in. You see a few things happening. First, options activity explodes. People are betting on how far it will fall or how fast it might bounce back. Second, day trading volume is much higher. And third, you just get more engagement on those retail-heavy platforms.
And for platforms like Robinhood, ticker HOOD, they rely on payment for order flow. So more volatility means more orders, which optimizes that revenue stream for them.
That's the core mechanism. Whether an individual trader is buying or selling, the trading platforms collect their fee either through commissions or, more often now, by routing those orders to market makers who profit from the volatile spread.
So Robinhood Markets, HOOD, and also the big players like Charles Schwab, SCHW, they gain from this increased volatility. Volatility is basically transaction fertilizer for them.
That's right. And Schwab, being a major custodian, also sees more activity from investment advisors and institutional clients who are reacting to the news and rebalancing their portfolios across the whole sector. The news itself becomes a high-volume trading event.
We've covered the immediate casualties and the unexpected beneficiaries. Let's look now at the broader damage, the sentiment spillover. A negative outcome like this often casts a shadow over similar companies, not because they share the drug, but because they share the risk profile.
Right. This is where investor psychology really takes over. A high-profile regulatory failure acts as a sudden, sector-wide risk reminder. Big investors immediately start looking to reduce exposure to anything that looks even remotely similar.
So let's quickly revisit that first group of losers just to set the scene.
That's Corcept, C-O-R-T, of course, as the central casualty facing years of costly work. And then the immediate contagion hitting Outlook Therapeutics, OTLK, just because it's also a small-cap, single-asset company facing one of these binary outcomes.
Okay, now for the second, broader cohort, the high beta development stage biotech names. Let's explain what high beta really means here and why they saw a sympathy sell-off.
Sure. In finance, beta just measures a stock's volatility compared to the market. So in biotech, high beta refers to those early-stage R&D companies whose stock prices are exceptionally sensitive to sector sentiment. They're volatile because they don't have revenue and they depend on constant raising capital to fund their research.
So their entire valuation is based on future potential, on the assumption they can raise money and pass their clinical trials.
Exactly. Their cash burn is very high. So when a big CRL hits, like the one for CORT, it signals that the regulatory environment is strict, and maybe the funding environment is about to get tighter. Investors then execute a risk-off move. They sell all speculative names because the cost of future capital just went up, and the probability of success just went down.
But why the broad sell-off? The news was about a Cushing syndrome drug, which is very specific.
It's a generalization of platform risk. A lot of these high beta companies use complex new technologies like gene editing or cell therapy, which have their own regulatory hurdles. The thinking is, if the FDA is being this rigid on a relatively straightforward hormonal issue, investors assume they'll be even tougher on these really complex new technologies.
And that de-risking behavior widens trading spreads and just pushes down valuations across the board for a while.
It's an immediate defensive reaction. The companies that were impacted by this sentiment include names like Editis Medicine, ticker EDIT, and Sangamo Therapeutics, SGMO.
EDIT and SGMO.
Right. These are R&D heavy companies focused on complex platforms, and they depend heavily on funding. A regulatory shock anywhere in the sector makes their future look a little riskier and more expensive.
Okay, let's spend some time on this third cohort, because this is where the specific language the FDA used really matters. The cardiometabolic and endocrine developers.
Yes, this spillover is directly linked to the FDA's main reason for rejecting Relacorilant. That phrase, insufficient evidence of effectiveness. That specific wording doesn't just scare investors in the Cushing space, it raises deep concerns about the clinical rigor needed for all companies working in adjacent areas, especially complex conditions like metabolic syndrome.
So investors start questioning the trial designs of other companies in related fields. What are they looking for?
They're suddenly focusing on a few key things. First, endpoint strength. Is the trial measuring a hard clinical outcome, like mortality, or a surrogate marker, like a lab value? Second, trial design quality. Was the study big enough? And third, the likelihood of getting approvals for label expansions, which is where a lot of the commercial value comes from.
So if the FDA was strict on a hypertension endpoint in Cushing's, how does that affect a company working on, say, a liver disease treatment?
Because metabolic conditions are notoriously complex, and the standards for clinical proof keep getting higher. Take NASH, for example, the fatty liver disease. The key endpoints there are histological, meaning they come from liver biopsies. Those can be complex, sometimes subjective endpoints. They take years of data to prove to the FDA.
So an investor sees the CRL4CORT and immediately thinks, if the FDA is this cautious about a known mechanism in Cushing's, how much tougher will they be on a new drug trying to reverse liver scarring?
That's the thought process exactly. It feels like the goalposts for regulatory success just moved higher for that entire therapeutic area, and that immediately puts pressure on companies focused on those kinds of endpoints.
Which companies started facing that caution?
We saw immediate pressure on names like Viking Therapeutics, ticker VKTX, and Madrigal Pharmaceuticals, MDGL. Both are heavily invested in developing treatments for metabolic dysfunction. VKTX in particular has been a high flyer with its work in obesity and a related liver condition. The market had priced in very high expectations for their data.
And the Corcept news raises doubts about whether that promising data will be enough to meet the FDA's strict standards.
Precisely. For MDGL, which is a bit further along, the Corcept decision was a reminder that even advanced data can be deemed insufficient if the benefit-risk profile isn't perfectly clear. It just increases the perceived failure probability for all upcoming catalysts in that therapeutic class.
So to sum this up, a single rejection for a Cushing syndrome drug didn't just affect Corcept. It served as a real-time lesson on the regulatory hurdles for entire categories of drug development, and that affected investor appetite across the board.
That's the central lesson. Investors recalibrate their risk models instantly when the FDA speaks, and the economic impact cascades out from that one specific drug to the entire development landscape, all based on perceived similarities in risk.
That is a very comprehensive look at how one regulatory letter can redraw the map for so many different players. So we've established that the FDA's complete response to Corcept Therapeutics, CORT, immediately sent market attention toward the approved alternatives like Xeris Biopharma, XERS, and BioMarin Pharmaceutical, BMRN, which solidifies their positions.
Right, and at the same time, that rejection generated guaranteed business for trial infrastructure companies like IQVIA Holdings, IQV, and MedPace Holdings, MEDP. And it also drove up trading volume for brokers like Robinhood Markets, HOOD, and Charles Schwab, SCHW.
And on the other side, the pain went beyond the main name to speculative peers like Outlook Therapeutics, OTLK, high beta platforms like Editis Medicine, EDIT, and Sangamo Therapeutics, SGMO.
And even adjacent developers in complex metabolic areas like Viking Therapeutics, VKTX, and Madrigal Pharmaceuticals, MDGL.
The market reaction was really a confirmation that regulatory standards remain rigorous, particularly for complex clinical endpoints. For you, the listener, the real takeaway here is to look closely at the specific wording in these decisions. Phrases like insufficient evidence are key.
They are, because that specific wording acts as a precise indicator. It dictates which groups of peer companies are going to experience the most immediate pressure on their valuations.
Required disclaimer. Please remember that the information presented here is for educational purposes only. This is not financial advice, and these comments should not be viewed as buy or sell recommendations for any security mentioned. The content is purely the opinion of the author and based solely on the material provided.
Thank you for tuning in to Breaking News to Trading Moves.